Acquiring a business? BizNexus simplifies it. Access thousands of updated opportunities in our DIY marketplace or supercharge team sourcing with OmniSource, your all-in-one platform for on-market, off-market, and coming-soon deals. Scale smarter today. Learn more or book a demo at www.biznexus.com.
Disclaimer from the always present legal team. Podcast conversations don't necessarily reflect the views of BizNexus Incorporated. Everything you hear is informational news and updates from around the industry. We're not recommending any investments. We're not offering any investment advice. Be sure to do your own homework.
Welcome back to The Deep Dive, where we cut through all the noise and find those golden nuggets of knowledge from the latest reports and research.
You got it.
And today we're diving into a fascinating BizNexus report.
Oh, yeah.
It breaks down the dynamics of business deals in the $2 to $50 million range.
Interesting.
You know that sweet spot where things start to get really interesting for both buyers and sellers?
Yeah.
That's where we're headed today.
Awesome.
To help us navigate this landscape, we have an expert in mergers and acquisitions, someone who's seen it all and can break down those complex concepts into actionable insights.
Absolutely.
I'm excited to welcome you to the show.
Thanks for having me. I'm always happy to dive into the data and see what's really happening in the M&A market.
So this BizNexus report really caught my eye.
Oh, yeah.
Because it zeroes in on that crucial lower middle market.
Yeah.
Where so many of our listeners are operating.
Okay.
Whether you're thinking about selling your business in the next few years, or you're looking to acquire a company in this range.
Yeah.
This deep dive is packed with insights that you can actually use.
Great.
BizNexus breaks down their analysis by deal size, highlighting trends and strategies for different segments.
Okay.
Within that $2 to $50 million range, we'll be unpacking those key findings.
Yeah.
And exploring what they mean for you.
Awesome.
But before we jump into the numbers, I want to start with something that BizNexus emphasizes throughout the report.
Okay.
And it's something that really resonated with me.
All right.
It's the power of preparation.
Absolutely. Preparation is key, especially for sellers in that $2 to $5 million range, where you might have more individual buyers or smaller firms coming to the table.
Right.
Having your ducks in a row can be the difference between a smooth, successful exit and a frustrating, drawn-out process.
And BizNexus isn't just talking about having your financial statements in order they go deeper into the nitty-gritty of what buyers are looking for. And it's not always what you might expect.
Right. They highlight a case study of a niche machining manufacturer who was initially facing some pretty significant valuation gaps with potential buyers.
Wow.
The problem wasn't the business itself. It was the way it was being presented.
So what did they do to turn things around?
They brought in Calder Capital to help them with their exit planning.
Okay.
And Calder didn't just focus on the numbers. They helped this manufacturer showcase the true value of their business.
Can you give us an example of what that looked like in practice?
Sure. One of the things Calder did was help the manufacturer streamline their financials. They made sure that everything was clear, concise, and easy for potential buyers to understand.
Okay.
They also worked with the management team to develop a solid succession plan, which gave buyers confidence that the business could continue to thrive even after the founder stepped down.
So it's about painting a clear picture of the future, not just presenting a snapshot of the past.
Exactly. And the results speak for themselves.
Yeah.
The manufacturer ended up securing a premium deal with a buyer who was excited about the business's potential.
Wow.
And it all started with that crucial preparation phase.
That's a powerful example
Yeah.
of how the right guidance can make all the difference.
Absolutely.
And it brings up an important point for you listening.
Yeah.
What are your biggest takeaways from this so far?
Right.
Think about how this applies to your own business, or if you're a buyer, what red flags you should be looking out for. We'll be diving deeper into the specifics of what buyers are looking for in each deal size range.
Yeah.
But this overarching theme of preparation, is something to keep in mind throughout our conversation.
And it's not just about attracting the right buyers, it's also about maximizing your valuation.
Okay.
We'll get into the numbers later, but BizNexus's data shows that businesses that invest in preparation consistently achieve higher multiples.
So let's shift gears a bit and talk about the buyers themselves.
Okay.
Because in this $2 to $50 million market, we're not just dealing with one type of buyer.
Right.
We've got a whole ecosystem of players.
Yeah.
Each with their own motivations and investment criteria.
That's right. We've got individual entrepreneurs looking to make their mark.
Yeah.
Strategic buyers seeking to expand their footprint.
Mm-hmm.
And of course, the private equity firms that become increasingly dominant as we move up in deal size.
And the BizNexus report does a great job of breaking down the pros and cons of each buyer type.
Yeah.
Which can be incredibly helpful for sellers who are trying to figure out who their ideal target is.
Absolutely. In that $5 to $10 million range, you often see a mix of entrepreneurial and strategic buyers.
Okay.
Entrepreneurial buyers, as we've touched on, can sometimes be willing to pay a premium.
Right.
Because they're personally invested in the business's success.
Yeah.
But they may not have the same resources or infrastructure as a strategic buyer.
So it's a trade-off.
Exactly.
Higher potential valuation.
Right.
But potentially more hands-on involvement post-sale.
Exactly. And on the flip side, strategic buyers often bring more to the table in terms of synergies and integration. They might have a wider market reach, access to distribution channels, or operational expertise that can help take the business to the next level.
So if we think back to that machining manufacturer example, it sounds like they could have potentially appealed to both types of buyers.
Absolutely. They had a strong business with a niche market, a proven track record, and a solid management team.
Right.
That's a recipe that could attract both entrepreneurial buyers looking for a hidden gem and strategic buyers seeking to add a complementary piece to their existing portfolio.
And as we move up into that $10 to $25 million range and beyond, we start to see private equity becoming a major player.
Right. And private equity brings a whole different set of dynamics to the table.
Okay.
They're typically looking for businesses that are scalable, have strong management teams, and consistent financial performance. And they're not afraid to pay a premium if they see the potential for significant growth.
So for sellers in that higher end of the market,
right,
understanding the private equity landscape is absolutely crucial.
It is. And the BizNexus report provides some valuable insights into what PE firms are looking for.
Okay.
And how sellers can position themselves to attract their attention.
We'll definitely be digging into that in more detail.
Awesome.
But before we do, I want to pause for a moment and ask you, listening, what stands out to you so far?
Yeah.
Are you starting to see how these different pieces of the puzzle fit together? How the dynamics of the market shift as we move up in deal size?
Right.
This is where it gets really interesting because understanding these nuances can give you a significant advantage.
Absolutely.
Whether you're buying or selling.
And that's what this deep dive is all about. It's about equipping you with the knowledge and insights you need to make informed decisions.
Yeah.
And navigate this complex landscape with confidence.
That's right.
Yeah. So we've talked about preparation and the different types of buyers you might encounter. Now let's get to the heart of it, valuation.
That's right, because at the end of the day, it's all about understanding what your business is worth and how to maximize that value.
Exactly. And BizNexus provides some fascinating data on EBITDA multiples across different deal sizes, which gives us a benchmark for what to expect in this market.
For those who might not be familiar with the term, can you quickly explain what EBITDA multiples are and why they're so important in valuing a business?
Of course, EBITDA stands for earnings before interest, taxes, depreciation, and amortization.
Right.
It's a key metric that reflects a company's profitability.
So essentially, it shows how much cash the business is generating from its core operations.
Precisely. And when we talk about EBITDA multiples, we're looking at how much a buyer is willing to pay for each dollar of EBITDA.
So a higher multiple generally means a higher valuation for the business.
That's right. And BizNexus found that those multiples tend to increase as we move up in deal size. For example, in the $5 to $10 million range, the average EBITDA multiple they reported is around 5.3x.
So if your business has an EBITDA of $1 million, a buyer might be willing to pay around $5.3 million for it.
Exactly. But as we climb to that $10 to $25 million range, the multiples jump to 6.0x to 6.9x.
Wow.
And in the $25 to $50 million range, we're looking at 6.9x to 8.1x EBITDA.
Those are some impressive numbers.
Yeah.
But what's driving those higher valuations? Is it simply a matter of size, or are there other factors at play?
There are definitely other factors involved.
Okay.
And BizNexus points to a few key drivers.
All right.
First and foremost, consistent financial performance is crucial.
Mm-hmm.
Buyers, especially in those higher ranges, are looking for businesses with strong EBITDA margins.
All right.
Ideally above 20%.
Right.
And a track record of steady growth.
Makes sense.
They want to see that your business is a well-oiled machine that can generate profits reliably year after year.
So no cooking the books. Transparency and consistency are key.
Absolutely.
Mm-hmm.
The other big factor, especially as we get into those private equity-dominated zones, is scalability.
Okay.
Can your business model be replicated, expanded, taken to the next level? If the answer is yes, you're going to attract a lot of interest, and that's going to drive up your valuation.
It makes sense. Investors are looking for businesses that have the potential to grow significantly beyond their current size.
Exactly. And that brings us to another important concept that BizNexus highlights.
Right.
Above average financial performance, or AAFP.
That sounds intriguing. What exactly does AAFP entail?
AAFP is like the gold standard in the eyes of buyers.
Okay.
It's all about exceeding expectations.
Yeah.
Consistently high EBITDA margins, strong and steady growth, low customer concentration, and a rock-solid management team.
Right.
It's basically saying this business is a winner,
Mm-hmm.
and it's only going to get better.
Mm-hmm.
And you better believe that AAFP businesses command premium valuations.
So if you can demonstrate that your business is not just meeting but exceeding industry benchmarks, you're in a much stronger position to negotiate a higher multiple.
Precisely. Now let's talk about deal structures.
Okay.
BizNexus breaks down the typical financing mix across different deal sizes, and it's interesting to see how it shifts as we move up the value chain.
Okay, let's unpack that.
Okay.
What are some of the key trends you're seeing in deal financing?
Well, in that $5 to $10 million range, you typically see a mix of buyer equity, senior debt, and maybe a bit of seller financing.
Okay.
Or earnouts to sweeten the deal.
Yeah.
Buyer equity is usually around 30-40%,
Right.
with senior debt covering another 40-50%.
Can you explain what seller financing and earnouts are for those who might not be familiar with these terms?
Sure. Seller financing is essentially when the seller acts as the bank.
Okay.
Providing a loan to the buyer to help them finance the acquisition.
Right.
It shows confidence in the business's future and can sometimes help get a deal across the finish line.
Right.
But of course, there are risks involved for the seller, so it's important to structure these agreements carefully.
And what about earnouts?
Earnouts are a way to align incentives between the buyer and seller.
Okay.
They're performance-based payments
Yeah.
that are contingent on the business hitting certain targets post-acquisition.
So if the business performs well, the seller gets an additional payout.
Exactly.
Yeah.
It's a common structure when there's some uncertainty about future performance.
Right.
Like in a high-growth business or one that's reliant on a key customer.
Interesting. So it sounds like the financing gets more complex as the deal size increases.
Absolutely. As we move into that $10 to $25 million range and beyond, we start to see more sophisticated financing structures involving things like indemnification caps and warranty insurance and escrows.
Can you explain those terms for us? I know they can be a bit daunting for those who aren't deep in the M&A world.
Of course, indemnification caps are essentially limits on the seller's liability for any unexpected issues or liabilities that arise after the deal closes. They're a way to protect the buyer from unforeseen risks.
So it's a way to manage risk for both parties.
Exactly. And rep and warranty insurance is a type of insurance policy that covers losses arising from breaches of representations and warranties made by the seller during the deal process. It can help smooth the negotiation process and provide peace of mind for both sides.
That makes sense. So as the stakes get higher, the level of scrutiny and the need for risk mitigation increase.
You got it. And BizNexus reports that the use of rep and warranty insurance becomes particularly prevalent in the $25 to $50 million range.
So it's definitely something for sellers in that range to consider.
Absolutely.
Yeah.
Now, before we wrap up this section on deal structures and financing, I want to emphasize one more point that BizNexus makes repeatedly in their report.
I'm all ears.
It's the importance of seeking professional advice. Whether you're a buyer or a seller, navigating these complex transactions requires expertise.
That's right.
Right.
Don't try to go it alone.
Right.
Working with experienced advisors, lawyers, accountants, and M&A professionals can help you avoid costly mistakes.
Yeah.
And ensure that you're getting the best possible outcome.
Exactly. They can help you understand the nuances of the market.
Right.
Structure the deal effectively and negotiate favorable terms.
So if you're thinking about buying or selling a business in this $2 to $50 million range,
right,
make sure you assemble a strong team of experts.
Absolutely.
To guide you through the process.
Couldn't agree more.
So we've covered a lot of ground today.
We have.
From the power of preparation to the nuances of different buyer types.
Absolutely.
And the intricacies of valuation and deal structures.
It's complicated stuff.
It is. But before we wrap up this deep dive,
I
want to make sure we connect all these insights back to you.
Okay.
And what it means for your business journey.
That's crucial because this BizNexus report isn't just about abstract concepts and market trends.
Right.
It's about providing you with actionable knowledge that you can use to make smarter decisions.
Absolutely.
Whether you're buying or selling.
So let's distill it down
to
3 key takeaways.
All right.
That our listeners can walk away with.
Yeah.
And start implementing right away.
Sounds good. First and foremost, I think the BizNexus report really underscores the importance of a proactive approach. Don't wait until you're ready to sell to start thinking about your exit strategy.
Right.
Start laying the groundwork now, even if a sale is years down the line.
Because that preparation phase can make all the difference.
It really can.
In maximizing your valuation and attracting the right buyers.
Exactly. And that leads to the second key takeaway.
Okay.
Know your audience.
Yeah.
Understand the different types of buyers in this market and what they're looking for.
Right.
Are you targeting entrepreneurial buyers, strategic buyers, or private equity firms?
Yeah.
Tailor your approach accordingly.
That makes perfect sense. You wouldn't use the same pitch to sell a product to a teenager as you would to a senior citizen.
Exactly.
Right.
Got to know who you're talking to.
The same principle applies here.
Absolutely. And finally, the third key takeaway is don't underestimate the importance of professional guidance.
Yeah.
This market is complex.
It is.
And there are a lot of moving parts.
Right.
Having a team of experienced advisors, lawyers, accountants, and M&A professionals can help you navigate the process smoothly and avoid costly mistakes.
Because even with all the knowledge in the world, sometimes you need that expert hand to guide you.
You do.
Through the intricacies of deal making.
Couldn't agree more. And the BizNexus report highlights several case studies where businesses that engaged advisors achieved significantly better outcomes than those who tried to go it alone.
So for anyone listening who's feeling overwhelmed by all this information, just remember those 3 key takeaways.
Okay. Be
proactive, know your audience, and seek expert guidance.
That's it.
That's your roadmap to success.
Absolutely.
In the $2 to $50 million market.
Well said. And remember, the market is constantly evolving, so stay informed, stay engaged, and don't be afraid to ask questions.
That's great advice. And on that note, we want to thank you for joining us on this deep dive into the fascinating world of lower middle market M&A.
It is fascinating.
We hope you found this episode insightful and actionable.
It's been a pleasure sharing these insights with you.
As always, we encourage you to check out the show notes for links to the BizNexus report and other resources mentioned today.
Yeah, good stuff.
And if you have any questions or want to dive deeper into specific topics, feel free to reach out to us.
Absolutely.
We're always happy to help.
Until next time, happy deal making.
A happy deal making.
Yep.
Thinking of exiting your business or taking on a private equity partner to help you grow faster? BizNexus has you covered. Tap into our network of thousands of best-fit investors, acquirers, and proven M&A advisors. And we'll help you begin the relationship confidentially on your terms, your timeline. Learn more at biznexus.com.